Welcome, folks. Good to see you all here. Um, Thank you for coming to the Hoops Tax Policy Forum. My name is Jeff Gramlich. I'm a professor of accounting and the director of the Hoops Institute of Taxation Research and Policy here at the WSU Carson College of Business. In keeping with WSU's land grant mission and the founding principles of the Hoops Tax Institute, it is my privilege and responsibility to provide tax-related educational opportunities and to encourage you to take ownership in the tax system that you are about to inherit. One of the ways I do that is by hosting public lectures and seminars. I'm pleased to introduce Washington State Senator Noel Frame, our keynote speaker for tonight's program. Before she takes the stage, I'd like to share a bit of her background. Senator Frame is a facilitator, organizer, strategist, and engagement specialist with more than 20 years experience in the nonprofit, private, public, and political sectors. She has represented the people of the 36th Legislative District as their state representative since January 2016. She now represents that same district as a senator elected in 2023. She is an award-winning legislator, having been honored more than 15 times for her work advocating for youth involved in the foster care and juvenile criminal legal systems, individuals challenged by intellectual, developmental, and behavioral disabilities, and economic development and reforming the state's tax code. One example of her work was a bill proposing a 1% tax on financial assets, such as stocks and bonds, excluding the first 250 million, potentially ensuring that Washington State's wealthiest residents pay their fair share. Senator Frame served as the chair of the House Finance Committee and as a member of the Appropriations and Community and Economic Development committees. And what committees are you on now?
You hear me okay?
Yeah.
There we go. In the Senate, I am the vice chair of the Business, Financial Services, Gaming, and Trade Committee, also the vice chair of the Housing Committee, and then also a member of the Human Services Committee.
Great. I don't think Sue McMurray had the latest information because it's changed recently, right? So Senator Frame, in addition to her role in the state legislature, she serves as the director of policy and planning at BDS Planning and Urban Design, a small business located in Belltown. Senator Frame earned her bachelor's in political communication and her master's in political management from George Washington University in Washington, D.C. Before I conclude, there are a number of you that are joining in on Zoom, and if you would just chat your questions in, I'll make sure that those questions are asked. Please join me in giving Senator Noel Frame a warm Cougar welcome.
Thank you. Thanks first to Jeff for inviting me. This is a lot of fun for me. You'll figure out really quick. I'll say one more update because now I know exactly where Sue got that information. I am now an owner of that company and a partner, and that company was rebranded last week. So the company name is now Uncommon Bridges. So, but I'm like, I know exactly what part of the website I need to update now. Noted personally. Good afternoon, everyone. As just shared, I'm Noel Frame, state senator from the 36th district. The slide up there, if you look off to the left side of the slide, the Space Needle, that is the southern end of my district. I represent the northwest corner of the city, starting with the Seattle Center campus at the southern end. And we are going to talk about taxes tonight. My favorite topic. Is it yours? Maybe, kind of. Well, I'm going to start by introducing who's standing in front of you. Let's go through our agenda for tonight. Who is this tax nerd standing in front of you? It's me. I am a tax nerd. This is how I talk about myself. I really love this stuff. I find it interesting. I will probably get extraordinarily animated while I'm talking. I hope this is fun for you. It's going to be fun for me. So I'm going to try to make it fun for you. So what we're going to talk about tonight, I'm going to provide a little bit of context on the current tax code and efforts over the past decade. I'm going to tell that a little bit through a kind of storytelling aspect and tell you a little bit more about my own role in it. I think maybe knowing a little bit about who's standing in front of you and why I do the things that I do, hopefully will make this slightly more interesting than just a bunch of slides where I talk about policy. I'll do that too, but I'll bore you at the end rather than the beginning. And then we'll talk about the better kind of exploring a better tax code in Washington State. I'll talk specifically about the tax structure work group and the work that came out of that. And then I'll highlight 4 proposals that sort of came through that process. Some were ultimately recommended, some were not, but they all came through the process. 4 proposals: a margin tax, a 3% property tax gross limit factor, the primary residence property tax exemption and accompanying renter's credit, and the property tax on financial assets, the one that Jeff just mentioned. As you'll see, I put in big all caps. Questions throughout this are encouraged. Y'all, this is going to be so boring if I just talk at you for 30 minutes. You're going to fall asleep. So like, short of doing that, I'm going to encourage you all, when you have questions, raise your hand. If I'm going to get to that later, I'll tell you. But I'd rather you ask something in real time so I can answer it in real time and we can have a bit of a conversation. And then we'll have more time at the end. But I just want to say, like, don't be shy. Don't feel like you can't interrupt me. I really want you to participate. That goes for our Zoom participants as well. I understand somebody is tracking Zoom questions. So let's have a discussion tonight. Okay? All right. So, hi. That's me. I'm Noel Frame, state senator and resident tax nerd. And I'll just say, by the way, there's not a lot of us in the legislature. Like, this is a moniker I carry proudly. I have made it my mission to learn as much as I can about the tax code and try to reform it. So I really appreciate being called a tax nerd. So that is me. I'm introducing myself. And I want to tell you a little bit about our code to get us started. You all may know this, right? We don't have an income tax in Washington State. It's really set the foundation for why we have the tax code we have today. And I am happy to answer all sorts of questions about income taxes, but the thing that you need to know as a foundation for this conversation is we did have a graduated income tax once upon a time. It was actually approved by the voters, initiative number 69. And then in 1932, it was struck down by our state Supreme Court as unconstitutional because it was a graduated income tax, meaning it had different rates. And our Constitution has this little thing called a uniformity clause that says you have to have a same uniform rate across the entire class of property. P.S. It also says that you can have exemptions, and we use that exemption all the time. And we'll talk about that more as we get to some of the specific policies. But because we had this income tax struck down, the legislature, in the aftermath of that, again, back in the 30s, coming off of the Depression, like, they scrambled to backfill that revenue. And they passed the sales tax, they passed the business and occupation tax, and a bunch of other excise taxes, which has led us to this day where we have this really crazy, as we call it, upside down and regressive tax code because it is so reliant on excise taxes. So the slide I'm showing before you, anybody heard of ITEP, the Institute for Taxation and Economic Policy? It's going to be your new best friend, ITEP, a great source of information. So ITEP does these rankings of who pays, and they rank all of the state's tax codes. And they literally just updated this like a couple of months ago. Washington State has long had the embarrassing moniker of having the worst in the nation tax code, the most regressive, the most upside down. And what we mean by that is we ask our lowest income households to pay the most in their taxes as a share of their income, and the wealthiest, most high income households in our state, the least. So we ask the least to pay the most and those with the most to pay the least. That's what we mean by upside down and regressive. This chart here is showing you, and it's kind of hard to see the smaller, but the lowest income households are those with combined household income of less than $33,500. The highest income are looking at households over $878,400. I will tell you, by the way, when the last time ITEP did this, that upper bracket, the highest, it started at like $250,000. So the fact that we have 4%, like that number of households making over $800,000 in income. We're not even talking wealth, income. It's kind of wild and tells you a lot about our state and how wealthy our state really is. So we did this, and I'm able to show you again, as I just said about the taxes, this is skewed so much because of these sales and excise taxes. So most of the states across the country have income taxes, and most of them have progressive income taxes. So they really consider your ability to pay when they put that tax rate into effect. That's how the federal tax code is set up as well. Because we don't have that, and we do all these flat rate excise taxes. They could be not flat rate, but we end up typically doing them flat rate. This is what's driving the inequity. So this is just sales and excise taxes. Okay. Any questions so far? Are we tracking? All right. Good. So even though we have this now second worst in the nation tax code, we have made progress moving from that dead last spot to just the second worst spot. It sounds like a small move, but it is worth celebrating some progress. In 2021, and we'll talk about this a little bit more in a moment, we did pass the capital gains tax and a working families tax credit together. Those two things together narrowed the gap. If you go back to this slide, the rough gap between that low income bracket and that high income bracket, it's about a 4x, right? So lowest income people are paying 4 times more taxes as a share of their income than the wealthiest households. Before we passed the capital gains tax and working families tax credit, that margin, it was 6 times, right? So like we have made progress, and that's worth celebrating, but we're still the second worst in the nation. And I say that it's an embarrassment for us because I think generally speaking, Washington State has a really proud history of really strong social, like progressive social and economic policy. Highest minimum wage in the country, right? And we led the fight in Washington State that has now changed minimum wage for people all across this nation. We are really proud of that. And we're the same state that then taxes the out of poor people. So there's a mismatch there in terms of values. And we'll talk a little bit about today why that is the case and why that's hard. So I said just for a moment ago that this measure is on income. Who could articulate the difference between income and wealth? Anybody want to take a crack at that? How would you characterize the difference between income and wealth? I'm going to get somebody to answer this question.
Who wants to do that?
Let's do it. Yes. Oh, and Jeff's got a mic. Here we go.
We have the online.
So if you're considering individual wealth as in like non-business wealth, I would probably characterize it as the total value of a person's assets. So that'd be both monetary assets and physical assets. But if you're considering income, that's considered individual cash flow from whatever job that they have or however they're making money, depending on how they're doing it. So I guess this.
No, I think that's exactly right. And I like that you use the term cash flow because I would venture to say, where's my tax attorney in the room? See what you think about this analysis. I would venture to say if a graduated income tax went before the state Supreme Court today, I actually think it would be deemed an excise tax, not a property tax, which is the current code. I think it's just a tax on the transfer, right? It's like you're selling your labor, just like you would sell a capital asset. You're selling your labor and you're getting income based on that, right? Same concept. To me, the concept of income versus wealth is it's the money coming in the door. Assets are what remains after you've met your personal needs, for instance, right? Cash is part of assets. Yes.
Sorry. You're done, Jeff.
So do you believe then, just I understand that the 7% capital gains tax is correctly classified as an excise tax or income tax?
Oh, I think I agree with the Supreme Court that under Washington state tax law, it is an excise tax. And I'm happy.
And why? Every 41 out of 50 states impose an income tax.
Uh-huh.
Every single one of those states considers that an income tax. The Internal Revenue Code has always considered that an income tax. You look in the Internal Revenue Code, and it's an income tax. The excise tax is a minuscule portion of that code.
Yeah.
based on the transaction of, say, buying cigarettes and alcohol and gas.
Yeah.
So you actually believe that's an excise tax?
Oh, I do, sir, because Washington State's tax code, we are a weird, unique animal in.
You're contrary to all the other states.
Correct.
Internal Revenue Code. You're right and they're all wrong.
I mean, the state Supreme Court is who said it's right.
They said that, but isn't that democratically controlled?
I think that is a matter of judgment.
It is.
Can I give you an example to explain why I think it's correctly?
Go for it.
Okay. So in the federal, man, we are way off the notes already. This is what I wanted. Yes. Okay. So in the federal capital gains tax, federal, okay, whether you sell a stock or whether you sell a piece of real estate, they're both subject to capital gains tax at the federal level.
Correct.
Okay. There are some, exemptions and stuff for a primary home. It's treated differently in the federal tax code, but this is my point. When we passed the Washington State capital gains tax, we excluded real estate because we already tax the transaction, the sale or transfer of real estate. We already tax that, and it's called the real estate excise tax. So when we passed the capital gains tax, when we are taxing the sale or transfer of capital assets, it's the same tax on a different class of assets. So the real estate transfer tax is an excise tax. The capital gains tax is an excise tax. Washington State's tax.
I might add 1.5%, I think, roughly when you sell a house. That's what you're referring to.
It's a progressive rate now. It was 2.28% until 2019, and then we made it progressive.
Yeah, but
It capped out at 3%.
7% for the capital gains when you sell the stuff.
But the real estate excise tax is on the entire transaction, so the base is broader. The capital gains tax is just on the gain. Okay. See, I know my stuff. Woo! Tax policy. So, and I say that because everything that you said is correct in the sense that all the other states do it one way, the federal government does it another way. Y'all, we are weirdos in Washington State. Like, we have the weirdest tax code. I show up to tax conferences, and this is not progressive tax conferences. I mean, I do those too, but I go to like the nonpartisan ones, the one with the business community, the ones with the tax practitioners, and they're like, did I hear you're trying to fix the B&O? Are you really gonna try to fix that? Because that is the weirdest system in the whole country. I'm like, I know, we're weird. We're weird because we didn't do the one thing that every other state did, which is an income tax. And we spent the last 90 years building a system.
Every state, 9 states.
Well, not 9, I know. Correct. So my point is like, these decisions were made based on state tax law, not federal tax law. And we have the code that we do today. This is your history lesson as we jump into this. Because the state Supreme Court struck down that graduated income tax more than 90 years ago, we have been left with the system that we have today. And people like me are trying to figure out how can we make it better for the people of Washington State, for individuals, for businesses, et cetera. Okay? So let me talk through a little bit about, again, the person that's standing before you and why I do this and my role in all of this. So I could go so far back, and I just did an interview with Sue, and she's like, how did you get involved in this? I'm like, I'm not going to tell you my high school story, but I am going to take us back to the year 2010. For those of you who were around and paying attention at the time, I'm looking at you, sir. We had a high earners income tax initiative on about 2009 or 2010. That was like an income tax for anybody who makes over 250,000, I think it was. That was struck down by the people of Washington State, not the court this time. They voted it out. And at the same time, they voted in an initiative requiring a 2/3 majority to pass new taxes in the state. So kind of in the aftermath and the ashes of defeat of that effort, progressive tax reform advocates really started to get together and think about, what are we going to do to fix this? This thing just got tried. It didn't work. What are we going to do? Earlier that year, I took a job running a progressive nonprofit called Progressive Majority Washington. My whole job was to recruit, train, and elect candidates, particularly folks at the state and local level. I didn't do federal at all. And so in the aftermath of this loss, We're trying to like educate candidates, recruit people to the cause, help do that. And, you know, we were successful. We elected a bunch of people that year. The first of which is this gal. Anybody know who this is? I'm the one on the right, my little baby face. You probably can't tell. It's 14 years ago. I can't believe this. Anybody know who the person on the left is? Jeff, you can't cheat. Don't tell. I'm looking. Anybody? Oh, y'all. Okay. This is your current Speaker of the House in Washington State. This is Lori Jenkins, state representative from Tacoma. And she has been our Speaker of the House since 2019. So Lori is one of several people that gets elected. They come in 2011, and they are organizers. They really understand, you know, that we've got this terrible situation with the tax code, and we need to do something about it. And they set their sights first on this 2/3 requirement to pass taxes. So they do some good work. They target a particular effort around tax loopholes and set us up to go to the state Supreme Court. And we'll come back to that in a second. But I will say at the same time that was happening, has anybody heard of the McCleary decision? Yes. Can you want to take a crack at McCleary decision?
I've taken courses
That you've heard it mentioned?
Yeah. Okay. I don't know that I would be able to recall the details of it.
So the McCleary is a family out of the Chinook School District that sued the state of Washington, saying the state wasn't funding basic education. So that's happening in the background. And we have the setting of the stage has happened. The new freshmen have attacked this tax loophole thing with the 2/3 requirement. By 2012, I'm actually running for office, and I'm really very, very focused on funding education. The Supreme Court comes back. They vindicate like my interest in funding public education. They say, yes, the state is not meeting its obligation to fund basic education. We have this provision in the Constitution saying it's our paramount duty to amply provide for the basic education of its students. And so it sets us down this path where like, we are going to have to figure something out on taxes because the state has like not been doing its job paying for public schools. And so what I'm kind of telling you, like, there's some momentum here as we're moving into this. We get to 2013, and I think I mentioned that the freshmen kind of set the stage by passing this bill and setting up a court fight. That 2/3 initiative was passed by this guy. Anybody know who this guy is? I'm like, this is Tim Eyman. Does that name ring a bell? Yeah. Tim Eyman has, for probably a couple decades at this point, kind of been the main architect of anti-tax initiatives in Washington State. And in 2013, we got a ruling from the state Supreme Court overturning his 2/3 requirement initiative, which kind of opened the doors for us to do anything on taxes, other than without being able to have simple majority rule, we weren't going to make any progress. But by overturning this initiative, we could make that progress. I would just say, Tim is a thorn in my side. He called me a vulture once to my face, proud moniker. I will tell you that in the context, if you all are tracking at all these initiatives to the legislature that will be on the ballot this fall, Tim Eyman has nothing to do with those, which I joke. I'm like, even the Republicans, I think, have tired of his antics. So the Republicans are running separate initiatives now, not letting Tim touch them. But Tim is a fun one. He's been in my office. We've had a good time, even though he called me a vulture. So, all right. So we passed this 2/3 initiative, or we overturned the 2/3 initiative, and we're heading into session. And you know, Lori Jenkins has gotten elected, and she introduces the capital gains tax now that we have the opportunity and the pathway forward. Representative Jenkins introduces this bill in 2014, 2015, 2016. I mean, just over and over. No, it doesn't even get a hearing. Literally doesn't even get a hearing. But by 2017, that McCleary thing I mentioned earlier is brewing, and suddenly people are like, we're going to have to pay for public schools. What a concept. And so we actually finally get a hearing. This is a picture from that hearing, 2017, and then 2018, we get the hearing. This is a public school mom in Seattle who is still very active today. She was part of a group called Washington's Paramount Duty, grassroots group of parents that are like, could you please just pay for our schools? The bill doesn't pass that year. The state decided to rely on property taxes rather than exploring the capital gains tax or anything else to fund schools. Again, happy to talk about that. That was the biggest property tax increase on the middle class in state history. And I stand before you as a progressive Democrat who cares about taxes, and I voted against it, which some people don't know, actually. I thought it was a crazy, stupid way to pay for public education. So I voted against it. But we get out of that effort and we're getting into, we've gotten past the McCleary fight, but the next big fight that we encounter is the pandemic. Anybody have a clue, like just a guess, wild guess, how much state revenue, percentage-wise, how much the state revenue fluctuated in the first year of the pandemic? Take a guess. What percentage? Yeah.
60%.
60%? God, that, I think people would have had heart attacks if that was true. Not quite, not 60. Yes?
Let's go 30.
30? Any other guesses? Okay, it was a 15% fluctuation. But when you have a $72 billion budget, like that's a lot of dollars. It was a very, like, that was a very big dip in revenue, right? And so, and this is of course in the era where people are working from home, businesses are shut down, schools are shut down, people have lost jobs. The demand on unemployment benefits is higher than the state has ever seen. People need rental assistance and food assistance. I mean, the state had never seen anything like the pandemic before, and people were counting on it. So to have even a 15% dip in revenue at that exact time, the federal government hadn't really shown up with federal aid yet. We freaked out. So suddenly the capital gains tax started getting more attention. And if you see, can you guys see that 17% versus 3%? I mentioned ITEP just updated their rankings. That was the spread in the before we passed the capital gains tax and working families tax credit. I could flip back a bunch of slides, but I won't. But that's what I mean by progress. It was even further apart. And then this is highlighting that gap. This is a protest at the state capitol. So this is getting attention. We're trying to figure out how to pay for things. I'll just say, meanwhile, never content with doing one thing at a time, I introduced the bill that Jeff mentioned, property tax on financial assets, commonly referred to as the wealth tax. You know, that doesn't pass. It's similar to an effort I passed for. I also passed like a comprehensive tax, or pardon me, introduced a comprehensive tax reform bill back in 2017. And I didn't get that either, but I got a work group. Wealth tax, didn't pass it last year, but I got a study. And I know that may sound silly, but I'll talk to you about the tax structure work group in a while. These things are actually really important to have thoughtful conversations with the public about policy. Not the least of which is because we're part-time citizen legislators. Like I have a whole other job besides being a legislator. So having work groups and studies when you don't get your big ideas passed is actually really, really helpful. So I introduced the wealth tax. It doesn't go anywhere. That's fine. But we do pass the capital gains tax. And I showed this picture. It was all on Zoom. We did 2 sessions remote. Yep. So perfect. Let me pause. Go ahead. Yeah. Great.
Professor Chase Potter.
Hi.
Hi. Before you move on from the capital gains tax, so my understanding is it applies to stocks, it applies to bonds, it applies to my Dogecoin portfolio.
So, yeah.
But it doesn't apply to real estate, right?
Correct, because we already have a tax on real estate.
So is there, if I guess this is just an opinion question. If we didn't already have a tax on real estate, conceptually for you, is there anything different about real estate versus those other kinds of assets in terms of the capital gains? I mean, I just don't. I mean, I take the point that we already have real estate taxes, but I don't understand really why it was
excluded.
Yeah.
I think to your question, if we did not already have a real estate excise tax on the books in current statute, we probably would have included it in the capital gains tax proposal, but we already had that on the books. It's like, it's not only at the state level, it's also at the local level. So to repeal that, to replace it with the capital gains tax from a tax administration standpoint and sort of disrupting existing systems with local governments, I don't think anybody thought it was worth it. And we actually worked really closely with realtors and others to make sure, like, the definitions are like 3 layers deep in the capital gains tax to make sure we're not double taxing real estate.
So is the magnitude of the tax roughly equivalent?
I couldn't say that for sure, but
Close.
because it is 7% on the gains and 2.28%, again, there's a range. It's 1.2 something up to 3% on the whole transaction.
Yeah.
They're not exactly, I couldn't say like how close they are, but the idea is that they're close.
So my understanding, I'm not a tax person, but my
Yeah.
understanding is very close to Professor Toolson's that they're not close. And so that would be I just still don't understand why there would be a difference, but maybe they're the same.
So what I hear you saying is we might need some reform to the real estate excise tax, or we need to roll it into the capital gains tax. Is that the proposal?
Well, I'm trying to get at the underlying economics of if we decided that we're going to tax assets, wealth that has appreciated in value, shouldn't it all be treated similarly?
Yeah.
Right? It's
Oh,
basically,
this is a perfect, the answer conceptually, I totally agree with you, which is exactly why I introduced the property tax on financial assets. Which we'll get to in a minute. So conceptually we agree. And if you're flagging that the policy that's on the books doesn't quite achieve what we were doing, there is, I will just say, in policy making, there are different facts. You can have ideal scenarios, and then the brass tacks of what you can actually pass at the moment, given who's at the table, given the context, are different. That doesn't mean we can't go change it later, right? And so if the question is, why are we treating 2 different classes of assets differently? Shouldn't we make them the same? I'm open to that conversation. I have that conversation all the time. So, Professor, it sounds like we have a follow-up conversation to have. Okay? Any other questions on this?
Yes.
Tax attorneys. Okay, I love it. Okay, I feel like I'm getting hit with all the professors and the tax attorney students. I'm counting on you to ask me some other ones. Let's do it.
I have lots of questions.
Yeah.
So first one, why long-term capital gains and not short-term capital gains?
It is a good question. I don't remember all of the details. My vague recollection is it had a lot to do with how tech companies compensate their employees. That is my recollection, but I
So you're
could.
reaching for options, RSUs.
Pardon?
You're reaching for equity compensation, right?
Yeah.
Equity compensation is long-term gain, whereas,
Stock options are usually ordinary income. If it's not qualified.
right, but then you sit on for 20 years.
Mhm.
Anyway, so second question,
Mhm.
you presented this in the context of a revenue shortfall facing the state. And it seems like moving away from excise taxes towards a quasi-income tax would actually exacerbate that problem,
Tell me
right?
more.
Well, because states routinely, the argument for sales taxes and property taxes and these types of excise taxes is that they're fairly consistent regardless of how the economy is doing.
Mhm.
On the other hand, capital gains by definition exist only when the economy is prosperous.
Sure.
And so one of the challenges, it seems, is you want to have a recurring revenue stream for education, but you're tying it to a tax base that is itself up and down.
So, great questions. So when you're building a tax code, there's a lot of considerations, right? There are different kind of principles of a well-designed tax code. So we talked about this a lot in the tax structure work group. Stability is certainly one of those principles, right? There's a bunch of different ways that you can say this, but transparency is another one, right? Kind of transparency in the sense of simplicity. People understand what they owe. Adequacy to pay for the things that you have committed to spending money on already. And then there's this other principle talking about equity, which when we did the tax structure work group, which eventually I'll get to, we actually converted that term to fairness, right? Because there's equity. So equity is a weird term to use because it means a lot of things in a lot of different contexts. And when we did the tax structure work group, we were also translating this in other languages. So we moved away from the concept of equity. There's horizontal equity, which is what you're getting at, right? There's the sort of consistency aspect. Everybody pays the same tax, kind of regardless of ability to pay. And then there's that vertical equity piece, which is about ability to pay. I'm going to finish this and I'll come right back to you. So there's vertical equity based, seeing how, considering somebody's ability to pay. So the point that you're articulating is you're talking about one aspect of a well-designed tax code is stability. And that's a separate question. When I talk about the regressive and upside down nature of the tax code, I'm largely talking about vertical equity or fairness based on ability to pay. The stability of a tax code, the adequacy of it, is another very important principle of a well-designed tax code, but it's a separate issue from what I'm talking about. It's a good question. And so when we did the capital gains tax, for instance, the way we designed it was the first $500 million went to the Education Legacy Trust account, which covers K-12, higher ed, but also early learning and childcare, which is where we dedicated a lot of that money to. We have a $72 billion budget. Roughly half of it is public education. Most of that money comes from property tax on real estate and tangible assets on the business side. So it added revenue, but it's not even close to the primary source of revenue for our public schools. So I don't actually think I'm too worried about it from that standpoint, because it's not like the whole thing when it comes to education. There's other revenue sources. I mentioned the first 500 million. What we decided to do is anything above 500 million on the capital gains tax goes into the school construction account for one-time capital investments to sort of deal with exactly the point that you're mentioning. So the details matter. You're asking really good questions. I think it's a separate question from the fairness or vertical equity thing. Yeah, go ahead.
So on the long-term capital gains tax, I know we were just talking about that. And I hope I articulate this the correct way, but within the tax code isn't, oh, here. Yeah, I know it's not on, but thank you. So I hope I articulate this the correct way, but an individual tax on all long-term assets. So like a more progressive property tax, a more progressive tax on dividends.
Mm-hmm. You say more progressive, do you mean like graduated?
Yes.
Yes. Okay.
Through legislation, and I'm asking, like, do you do this in your work as a legislature, as a senator? Do you work to re-implement that? Because as part of the wealthiest group in Washington State, it's a no-brainer that they would obviously own more homes. They're going to own bigger, larger amounts of money, and they're going to be invested more in the stock market. And so I'm asking, is that a fair game for what you do, or is that something that you'd support?
So as around progressive property taxes on real estate, could I go that direction?
And a dividend tax. Yes.
And a dividend tax. Okay. Dividend tax, I honestly haven't thought about too much. So I can't speak to that like too much. I can talk to you about the property tax piece.
Okay.
The property tax is uniquely challenging for us. And it's because of that uniformity clause. So the uniformity clause in the state constitution forces us to have a uniform rate of taxation upon the entire class of property. Okay. Real estate is one class of property, residential and commercial. So we can't have different rates of taxation. We can't do progressive rates like on the value of your home or based on a different use. I will tell you, this has come up a number of times in two separate contexts. One, Vancouver, BC did a like vacant homes property tax, trying to get at people buying real estate. In this case, it was a lot of foreign investment, and there's details there that really matter. But for our purposes, I'll give you this example that they wanted to have increased they did an extra property tax on vacant homes to really try to discourage people from buying real estate and then just leaving them vacant, right? That's our community. Things were happening. They were, they were being occupied by people that didn't live there. They were falling into disrepair. So Vancouver, BC did that. That got us a lot of questions. Can we do that? The other thing that we got a lot of questions on is people buying up homes and using them as Airbnbs and taking them out of the housing market. Same thing, can we do an increased property? The answer to all these questions was no, we cannot because of the uniformity clause. One of the things that I've explored, and this is the legal crux, I'm looking right at you, lawyer. The legal crux of the financial asset property tax, the wealth tax that I've proposed, is while we do have this uniformity clause, what's held in balance with it in the Constitution is the power of exemption. And we exempt stuff all the time. And we don't go and ask the voters to approve it in the Constitution. Generally speaking, everything in the legislature, we pass it, it's constitutional until it's not. So we can pass something and it will stay on the books unless somebody goes and takes us to court and challenges on it, generally. But we've looked at that power of exemption being held in balance with uniformity. So while we can't do graduated rates, what we can do are flat rates paired with exemptions, which is the exact structure of my proposal. That makes sense.
Yeah, that makes sense.
Yeah. So I've definitely explored that. And let me keep going and I'll get to that really quick. So I want to just talk, any other questions? These are awesome. Thank you all. I just have to show this one thing. When I say I'm a tax nerd, that is what my husband bought me for my birthday. I'm so mad that I didn't wear it today.
What does it say?
Tax reform. Because I am that level of a nerd. I just want you all to know. Okay. So I've mentioned the tax structure work group. Just really quickly, again, like I tried to do some big comprehensive, tax reform proposal in like 2017, my second year in the legislature. I was shot down pretty hard, but they're like, you can have a work group. So I got this work group and I did a little tour, bipartisan, myself and now retired Representative Terry Neely, who represented Dayton. He and I went around the state. We did like kind of town hall type of things. We went to Spokane, Yakima, Vancouver, and Seattle. We asked these questions like, what do you think of the tax code? Do you like it? Yes or no? If you don't like it, what would you change? And like, but what would you change in a revenue neutral context? And like, ask people like, give us ideas. What do you guys want to do? Big surprise. Nobody liked the current tax code. Everybody hated it. But people like didn't really have great ideas for us. They're like, I don't know, this is really hard. Revenue neutral, like, I don't know. So I came back to the legislature, tried again to pass something and said, nope, keep working. And this group was reauthorized for several more years. It added the Senate and it got, frankly, a lot more investment to really do deep, robust community engagement and research and analysis to really build out what could alternatives be to our current tax code. I just want to show you this slide. You can't actually read this. But I want you to see that this is from the final report of the tax structure work group. I will read you what you can't read up there. When I say deep community engagement, this effort, and this was sadly, I got to do my roadshow in the first iteration, but then COVID. So everything was virtual. We did 14 town halls in 7 different geographic regions. And in every one of those, we had a daytime meeting and an evening meeting so we could accommodate taxpayers that had work at different hours. In every one of those meetings, we would do an intro and then we would break into who wants to talk about business taxation, who wants to talk about individual taxation. So we did that, 14 town halls. We did 6 versions of that in different languages other than English. We also did these we go to you meetings, 30 different business groups and community groups. We presented to them. We also did a survey. We had a long form and a short form, and we translated that short form again into 7 different languages. And we had almost 3,000 participants in that survey alone, where 15,000 free form responses were coded and analyzed for interest in this. So I will just say people have told me they've never seen anything like this in the state legislature. It was very real community engagement. We talked to taxpayers. We got great ideas. And in that, we put forward these kind of policy concepts, right? So if you kind of look on the employer compensation tax, if anybody was tracking Seattle's payroll tax, so kind of another progressive effort to tax kind of companies with corporate payroll of more than $7 million. City of Seattle passed that. So maybe we should look at that for the state. We did that. We looked at the value-added tax, which is used in Europe a lot as a potential replacement to the B&O tax. I'll skip over and say the margin tax in the middle was another idea to replace the B&O tax. And then you see that primary residence property tax exemption and renter's credit. Again, we can't do graduated property tax, but we could have some targeted exemptions. That's what that was. Wealth tax, I've talked about this already, the property tax, property tax on financial assets. The limit factor we've talked about, working families tax credit, expanding that was what we were considering. And on the far right, corporate income tax and personal income tax. I'll just note that for years, I've had businesses complain to me about the business and occupation tax. And they're like, I want to pay tax on my profit. I want to pay tax on my net receipts, not my gross receipts. And I'm like, well, that's the corporate income tax. But based on the federal tax code and how it's designed to get the advantages of piggybacking onto the federal tax code, if we were to ever do a corporate income tax, you really have to have a personal income tax too, for like pass-through entities like my company, right? Small business S corporation. It's not the entity that pays taxes. It's not a big C corporation. It's a pass-through. So it's actually like we pay taxes as individual owners. So you really have to have a personal income tax. So when we went out there, like we really talked that through with the taxpayers that came to these meetings. And if you kind of look at the slide, you can kind of see it's winnowing like this by design. So we had all those at the top. We went through all these different meetings. These are kind of quarterly meetings of the work group. And what you see in December 22 are the final two things that came out of that work group, which is the margin tax and the property tax growth limit factor. If you look a line or two up, you see that primary residence property tax exemption, wealth tax, limit factor, working families tax credit. These were still in the running up until the last meeting. And the reason they didn't come out of the work group is, it was revenue neutral. Because we didn't have agreement on the revenue raiser, the revenue reducers didn't go forward in the work group. It was by design to have a revenue neutral only conversation. The margin tax was a fully contained replacement to the B&O tax all by itself. Our recommendation for the property tax limit factor was a local only thing, so it didn't affect the state, so it kept the state part of it revenue neutral. So that is what we have here. So what I want to do really quickly is run through those 4 proposals, and I just like super high level so you guys can see what the bills are. And then I'm super happy to talk through if anybody wants to get into the weeds with me. We're still doing fine on time. So quickly, the margin tax, the Senate Bill 5482, introduced by myself and my Republican co-chair, Senator Keith Wagoner of Skagit County. So it is a wholesale replacement to the B&O tax. And the way I would describe this, it is, whereas B&O is gross receipts with no deductions, although there's 200 exemptions. The margin tax is a modified gross receipts. So you take your gross receipts, and then every business each year gets to choose one deduction of their preference. And it's one of those: cost of labor, cost of goods sold, flat $1 million, or flat 30%. Then their tax is calculated. In doing that, we repealed nearly all of the current B&O exemptions because they're not necessary anymore if you give everybody else a deduction. The 30% that we kept were for those that were legally required or administratively necessary, not worth spending too much time on. We retained an easy computation option, which basically would allow smaller businesses to essentially do the B&O tax if they wanted to at a lower rate is 1.75%. The final rate of 3.1966. It was just how we just backed into that rate based on being revenue neutral. Okay, so that is the B&O tax. The margin tax to replace the B&O tax. That had a hearing in the Senate, my committee, the Business Financial Services Gaming and Trade Committee. Hilariously, I had to laugh. I even laughed at this. Not a single person testified in favor. Everybody was like neutral or no, because they did the math with that rate, and they were like, I'm going to have to pay more. And I'm like, correct, because everybody that's testifying on this bill are all the people that have lobbyists who have been in Olympia for decades advocating for exemptions for your industry. So the people that show up to testify are the ones who have worked really hard to make the tax code work for their business. And who couldn't show up? Anybody want to guess who couldn't show up? Small business owners, right? People that are literally have to go run their businesses. So it was a little disappointing, but both Senator Wagner and I are hopeful that if we have a little bit more time, it's a big change. It's replacing a tax that's been in place for 90 years. Not a small thing. The bill will come back next year. Yeah.
Question. How would you feel about just getting rid of the 200 exemptions?
Yeah, such a softball. We love it. So we have this deeply unfair tax that is the B&O tax. And right now it is like, I mean, quite frankly, it's rigged by having been manipulated by all these 200 exemptions. Because the revenue is still getting raised. It's just that it shifts who's paying, essentially. Not shift in the technical tax sense, but sort of at a high level. You know, one way you could do something like shift to the margin tax, where you have what I think is a really thoughtful approach and a little bit more fair. Or you could just lean into how unfair the business and occupation tax is, repeal between 170 and 200 exemptions you choose, and just take those savings to reduce the rate. You could do that. I mean, Ohio has something like that, and it is even more unfair than ours. Like, we could lean into the unfairness and just make it simpler to the point of well-designed tax code. The B&O tax is not at all transparent. It's violated that principle. You could repeal all the exemptions, lower the rate, and lean into it being a more transparent tax. So I think that's one option. I have feelings. I think the margin tax is a better proposal, but that is an option if folks don't want to go that way. We could also just repeal all those exemptions. Quickly, the gross limit factor for property taxes. Again, we just did the local only option. There were other proposals that did the state too. Property tax is budget based. So you basically decide how much money you want to raise, and then you work backwards into what that rate is going to be. So anytime you exempt somebody, it sort of shifts the responsibility to somebody else. And each year, policymakers in the local government, say like Whitman County, decide how much they need to raise, and they can raise it up to 1% each year. They don't have to take that increase, but they could. That is a Tim Eyman special. That 1% growth limit factor was put in place by initiative. And it is severely restricted local governments, particularly counties, so we give very little. The state has to give local governments tools in their toolbox for taxes. So if we don't tell them they can use that tax, they can't. So counties really have very few options, and property tax is the main one. We have heard local governments beg us for this for years. And partly, and I think in the current context, the best way to explain this is inflation has been wildly high, and governments are trying to keep up with labor costs and other services in community. Think of counties pay for cops, like sheriffs, they pay for prosecutors. So kind of a lot of your big public safety items, they can't afford it. And so they've been asking us to increase this. So this proposal would say you can do inflation, like 100, like basically no change plus inflation up to 3%, if that makes sense. So that was that option put forward. Again, in advance. Oh, I should have moved my slide to explain exactly what I just explained. And that is local governments have to opt in. Third proposal, the rebates I mentioned earlier. So we, a lot of states across the country have something, they call it a homestead exemption. We didn't call that because it's actually quite confusing, because there's also homestead exemptions in bankruptcy law. No. So all I would say is if you have your primary residence in Washington State, that rather than paying property taxes on the full value of your home, we treat your home a little bit differently. And we say, we're going to exempt the first $250,000 of assessed value of your home before your property tax is calculated. But because renters also pay property tax, they just pay it through the rent. We do an analogous renter's credit, which is 2% of gross rent is sort of the rough equivalent. And what we ended up with, I'll come back to that in just a second. I don't think I put it up here. It was roughly like $480 in sort of the revenue estimates that we were doing, that each person in the state that had a primary residence, and there's details here, but it's fine. We get it like $480 a year to account for the fact that their home is not just an asset. Their house isn't just an asset, it's their home. We should treat that differently. There have been proposals. There was one this year that did a shift instead of a revenue reducer. Ours was intended to be paired. Remember, it was part of that revenue neutral exercise. So the idea was you could do wealth tax and then pay for offsetting this. Chair Robinson, June Robinson is Chair of Ways and Means. She had two proposals this year that did the primary residence through a tax shift, and then did the renter's credit just by adding on to the working families tax credit for low-income families. So there's other ideas out there. And I actually just put the slide up for a second. Property tax is not the most regressive tax. Hated by Washington residents, partly because for folks that are lower, are on fixed incomes, particularly seniors, they make that as 2 lump sum payments each year. It's actually really hard on people, but there is still inequity. So property taxes and how we do it because of our uniformity clause is also driving inequity. Finally, 5486, my proposal, the property tax on financial assets. So here's where I wanted to, we were talking about asset classes earlier. So the concept of this, I have a lot of reasons for why I wanted to do this, but I really narrowed in on this particular tool because I realized like that we're not treating assets the same. So in Washington State, how do we tax property, right? So upper left, homes, land, real estate, that's the state property tax. That's how we tax that when you own it, it's property tax. When you sell it, it's that real estate excise tax that we talked about, okay? In that bottom right-hand corner, when you sell the capital asset, stocks, bonds, or other financial assets, with the passage of the capital gains tax, we're taxing the sale of that. But in that upper right-hand corner, we're still not taxing the ownership of financial assets. So it's just this wild inequity in the tax code. And why that matters is who holds their wealth in houses versus who holds their wealth in financial assets. Our homes have been the primary tool of wealth building for the American people, if they were so lucky to own a home, for generations. That is the main tool of wealth building. Small business ownership, another one, but for the purposes of this, we'll talk about homes. That's the main wealth building tool. We tax it when you own it. We tax it when you sell it. Financial assets, which is how wealth is held by literal billionaires and ultramillionaires in our state and across the nation. We are now selling it, we're now taxing it when they sell it, but we don't tax it when they own it. That's the inequity that I'm trying to solve with my proposal. And by the way, we have nearly 100 billionaires in Washington State, which blew my mind. Yes, because we only hear about the 2, 3, 4, maybe 7 that make the Forbes top 200 richest people in the world. And when you actually get the data from the IRS and start working backwards and really figuring things out, the estimate from the department was about 100 billionaires. It's obviously a point in time. The proposal I put forward this last year, which exempted the first 250 million, affected about 700 taxpayers. We have a lot of extraordinarily wealthy people who buy Washington State home. So this is the proposal. It's a flat rate of 1% because that's the constitutional maximum. We have to call that the $10 rule in state tax policy. We exclude that 250 million. And I'll just say this is a proposal. There are dials. You could dial the rate, not up because it's at the constitutional maximum, but you could dial the rate down. The first proposal I had exempted the first $1 billion. I heard from both progressives and conservatives that was too high, which is super interesting. To broaden that tax base a little bit. The first proposal was only 100 taxpayers because there's only 1 billionaires. The proposal I put forward is now 700 taxpayers. You could dial that down to a smaller amount, but what's interesting is there's sort of a diminishing return. So it's not like income tax where we track that, the government, we have a federal government system to piggyback on. We would be building this from scratch. Essentially, the capital gains returns are going to help us piece that together. But you get much below $50 million of assets, it's not worth it. It's literally not worth the work it would take. So no matter where we ended up on this, it's still going to be affecting really, truly the wealthiest among us. Yes, you have a question? And I know we're almost at time.
Yeah, you're fine.
Yeah. I'm sorry, was there a question?
One question.
Yeah, this is Professor Richard Toulson.
I should have known you were a professor. So professors and the lawyers hitting me with all the questions. I love
You're
them.
talking, the folks you want to go after for the wealth tax are the mobile people in the United States. It's nothing for them to change states. They already probably have multiple residents outside the state. You don't want to lose these people. You know Jeff Bezos, he was gone and immediately sold several $billion of his stock. My concern is, and these are the folks who start businesses. They get wealthy from Microsoft and Amazon. They do startups. They hire students. And I just think this would have a delirious effect on our taxpayers' overall wealth in the state of Washington. If this ever came about, I don't think it will, but I think you.
So little faith in me, Professor. So little faith. So I hear that. And it is absolutely one of the biggest arguments that I face in this conversation. And, we could argue about this all day and I'm not going to convince you. What I will say is the research doesn't actually support that that's true. And what was so fascinating about when Bezos moved, I got calls from reporters across the country on this because of my work, right? If you actually read Jeff's announcement, go to the Instagram post.
I know you didn't say it, but
He didn't say it.
Yeah, but you don't know.
And the things you don't know, but what I saw every conservative think tank and frankly reporter pick up on was they made up the narrative. Jeff didn't say it, but it still must be true. Like Jeff moved because of taxes. If Jeff were going to move, he could have moved earlier. He could have moved the moment we passed the capital gains tax. He didn't do that. He moved to the place where his parents lived, to where his fiance was from, to where Cape Canaveral is located, and he's more active in Blue Origin. He had stepped away from day-to-day operations of Amazon, so he wasn't needing to be here for his business. And the reason I say that is every reason that Jeff Bezos listed for moving actually tracks the research about how regular people make decisions about where to move. There are anecdotes.
You did move to Florida.
Oh, no. But again, there's also Cape Canaveral right there, which is a major public institution and asset he needs access to for the company that he is now running, which is Blue Origin. It's not Amazon anymore. So I say that to say that anybody can speculate that he moved there because of taxes. It's not what he said. There's rational reasons for why he chose Florida over other places. It's what he put in writing, right? And like, that is what the actual research tells us. And what else the research tells us is as policymakers, the best thing that we can do from a like long-term economic growth and to support entrepreneurship, as you just talked about, is to tax the people who have realized their wealth. They've made money. They have got it. Tax it and invest it back into the things that attract people to come to our state. Like that's how we have long-term economic growth. The number one vulnerability to our economic growth as a state right now is the cost of housing. Nobody can afford to live in our state anymore. We're 10 years behind on housing supply, rents through the roof. Like that's our vulnerability. We'd be better off taxing wealth and investing in programs that provided pathways to home ownership and like did rental assistance and anything, because like that's what the research tells us. So again, as long as there's the Elon Musks of the world that like take polls on Twitter to determine what to do with his life, and he's a sociopath narcissist, right? As long as we have people like that out there providing us anecdotes like that, I get that it's hard to hear what the research actually tells us, but that's what the research tells us. So, but to your point, because it is such a big criticism, I immediately got to work after like first introducing the bill and started working with other states. I am an organizer. You may have heard that in my early part of my story. I reached out to State Innovation Exchange is a group I know. They brought in the State Revenue Alliance. The day that I reintroduced the wealth tax in 2023, I did it the same day as 7 other states. I coordinated. I did that, and a year later, I know we're almost done. Yeah, and this is my last slide, actually. Recognizing that was the criticism, I reached out to colleagues. I literally started just calling people up. I saw that you introduced a bill that's kind of like mine. Can we talk? So California, Illinois, New York, Connecticut, Maryland, Colorado are all involved. This was from 2023. This is from this year. My colleague, Emily Kornhauser, who is the chair of the Ways and Means Committee in Vermont.
And they're all losing population, right? New York, California, moving to Texas and Florida.
But do you know who's moving?
Oh,
Yes.
no, I see it's wealthy taxpayers. Sorry, it's wealthy taxpayers and losing the taxpayers. Sorry, I probably said it now.
No, I just want to focus on.
So, Professor, what I send me your research and I'll send you mine.
Okay, research is research.
Because the research that I have shows me that the outflow migration from those states is actually middle and low income people that can't afford to live there anymore. It's not wealthy residents. The wealthy people are not leaving.
200,000 above.
Your research, we're going to exchange. So, but it is a criticism that I can't ignore. And so I've been doing cross-state organizing. Senator Kornheiser's legislation didn't pass this session. And she is working on, like, we have a study on our side. She's got a study on her side. She's now exploring what an interstate compact could look like for states to actually work together on tax policy. Again, as somebody who works on policy way beyond this, I would love an interstate compact, as I was saying to Jeff before we walked in. So states would stop getting pitted against each other for tax incentives to subsidize businesses to come to our state. That would be nice. So this is
What I'd like to
my
propose here is that, because I do believe that research is important and valuable. I would be happy to be the intermediary and get research from both sides and share it with each other. You both have my email addresses. I'm happy to connect you. But I think because we live in a world where truth is malleable, and I think high quality research is important, and that's what we aspire to here at WSU.
Great. That was actually my last slide. So I'm really grateful for all the questions. And I love that we've gotten to the point where we're at let's discuss and we're actually past time because it means people ask questions during it. Thank you. Anything else? Any other questions? I'm happy to stick around.
There is one question that came from earlier on, but I said hold on to it, and that is: are there any bipartisan tax bills going through the House or Senate, or is that just pretty uncommon?
So the margin tax proposal I put forward, that is bipartisan. That was Senator Keith Wagoner and I put that forward from the tax structure work group, and it was revenue neutral. So that is one major proposal. I will say it's not impossible. I mean, when we did the property tax increase to pay for the McCleary decision, that was ultimately bipartisan. There were yeses and nos on both sides. Like I said, I was a no on my side. Tax exemptions, people love to reduce taxes and create additional tax exemptions. Those are always bipartisan. I personally hate them. But those are always bipartisan as well. So major revenue raisers, like what I've talked about, like the wealth tax, like capital gains tax, we have not seen a lot of bipartisan support for those.
We have time for one more question. Go ahead.
I know you mentioned bipartisanship. No, this microphone doesn't work for some reason. Yeah. But I know you mentioned bipartisanship in the House and the Senate. Do you feel that voters throughout the state, regardless of being Democrat or Republican or wherever they are on the political spectrum, do you feel like they're also sort of on the same page when it comes to tax issues that affect them? And I'm talking about, of course, middle class, lower income voters. So do you feel like that higher taxes, especially property taxes, and also not income taxes, but do you feel like they are being affected the same way and sort of have the same view and want sort of the same result from the legislatures?
Yeah. So what I will just say, and this is a good way to sort of close out, writ large, what's tough about tax policy is it really gets short shrift as a topic of policy. We spend so much time fighting about raising taxes or lowering taxes that we really miss opportunities to talk in detail about the policy itself. I think when you slow down and really create space for those conversations, you can find bipartisanship, which is exactly what we were trying to do with the tax structure work group. I will say in public polling and in the work we did with the work group, where there is agreement, generally, not everybody, but I think a majority in this state would agree that the inequities in our tax code are not okay. Nobody wants to see our lowest income households paying 4 or 6 times more in taxes as a share of their income than our wealthiest households that literally are some of the wealthiest people in the world. There is agreement that that is fundamentally unfair. People are feeling squeezed. I think the property tax, there is bipartisan agreement that overlap of people on fixed incomes that have assets, their house that have raised in value, and they can't control that's tough for them, which is why we have the senior property tax exemption program. We should expand it. And we have that primary residence property tax exemption. So, but generally speaking, the topic of policy really gets short shrift in policy conversations. It's part of why I do the work I do. I'm obviously a big nerd about it. I try to bring that enthusiasm so people can actually be invited in. It's intimidating as a topic. But I hope tonight has been inviting to you all, and you take this moment to get more interested and engaged on tax policy. And I hope anybody who watches this afterwards does the same. So thanks for the question. Really appreciate it.
The microphone, I confirm. The other one? Yeah. Thank you, Senator Frame. It's truly a delight to have you here, and I hope you'll come back. And she promises to lead us in a karaoke song at the end of the next time.
Next time.
Yeah. So we have a little bit of Cougar swag for
Thank
you.
you.
And really appreciate it. You brought the time to life and just thrilled.
Thanks for having me. Appreciate it. Thank you, everyone.